I was able to wholesale that one for 25K, and I was like, holy shit. Like, I understand that over the long term, we're going to make more money buying and holding. That's where real wealth is accumulated. No, I saw your video. That's, you're a pretty big fan of Sudbury in terms of like when you talk about northern cities, that's probably the one that you're most bullish on. That's where I'm investing as well. Right now, being in and out of a property sooner is better nowadays than doing a project that's turnover is going to be 8 or 9 months, in my opinion, my humble opinion.
What is up, YouTube? Matt McKeever here, and I've got Austin Yeh on the channel. Hey, Austin, how's it going?
Hey, Matt. Good. Hey, guys.
Awesome. Well, I'm excited to catch up with you. It's been a while. I don't even know really the last time we would have chatted or the last time I would have had you on the channel. So if you don't mind, let's maybe just do a quick little synopsis of, what the last, what your real estate investing journey has looked like up until this point. And then let's maybe talk about the last year and a half.
Okay, sounds good. Yeah, I think from the last time we chatted, I gave a bit of background into my real estate journey, how I got started in Windsor because I only had $40,000 saved, made every mistake in the book, but fortunately, due to appreciation, like a lot of people are being saved by appreciation nowadays, fortunately, through appreciation, I was still able to burn my first property and then get into my second one, third one, then started raising capital and going from there, right? So that was kind of what we discussed in the first video. If you guys haven't checked that out, I hope you'll leave the description below, Matt.
Yeah,
someone to do that. But yeah, since then, so at that point, I think I had about maybe 10 or 11 properties. Since then, I think I have probably like 22 or 23 properties now. Doubled in portfolio size, but the acquisitions this year has definitely slowed down. What I've been focusing more so now, or just actually to give an update, like the biggest milestone since that video is I left my full-time job. So that's very exciting. What else is there? Like I started wholesaling as well and building that business as well, doubling down on the Rise community, and obviously still acquiring assets. That's what I'm up to now. I know there's probably like a ton of questions on how I got from there to quitting my job and starting all these other businesses, but I'm sure we're going to dig down into that a little bit later on.
Sure, yeah. And I'd love to discuss what was the transition like going from full-time to being self-employed as a real estate investor?
Yeah, so the transition was definitely a bit different than yourself and Mike Rosehart, where you guys felt confident with kind of the passive income that you built up through real estate investing, right? Like the cash flow. For me, I've just never felt confident in leaving with cash flow. And I thought there would always be a number where I would be confident, but that number kept on going up as I got deeper and deeper into real estate and realized that shit came up a lot more frequently than I expected. Or maybe it was just bad luck, chalked up to a lot of the properties that I bought had deferred maintenance. And during my first year of owning it, I had to sink in quite a bit of money, right? So then that kind of scared me from retiring from just solely cash flow, or at least until I had like a lump sum of money built up for each property, right? That I can confidently rely on, then I can live off cash flow. That was going to take a while and I didn't have any patience for that. So I started working on active income streams, and that's when I did a couple of wholesale deals before, but by accident, right? Like I was searching for off-market deals and taking them down myself. And whenever I wasn't able to take them down myself, or it just didn't fit my criteria, I would explore wholesaling it for like a small fee, maybe like 5K, 10K. I just didn't take it too seriously. I just wanted to dispo it and get it off my hands. And then I got a deal, and I wasn't able to raise capital on it with a JV partner. I think it was during the pandemic at that time. So a lot of people were kind of hoarding onto their money and afraid to deploy it into real estate. But I was able to wholesale that one for 25K. And I was like, holy shit. Like I understand that over the long term, we're going to make more money buying and holding. That's where real wealth is accumulated. However, it's pretty sweet to make 25 G's off of like one deal. And it was like money that I could use, spend, and touch immediately, right? Whereas real estate it's a physical asset, but it's paper gains a lot of the time, unless you refi it. So once I got I got a taste of that wholesale money, I decided that was going to be kind of my means to an end in my full-time job. To get 25K in cash flow a year, it's going to take some time, right? Like it's not difficult, but it'll take some time to build that type of cash flow up. So it's like if I do a couple of deals at 25K each, then that's obviously already going to replace my full-time income. So I started doubling down on wholesaling, did a couple more deals, and I was like, okay, I am done with my full-time job now. I guess what that turning point was for me, where I was like, okay, like this is it, last straw, no more, was I got a terrible raise. I got like a $700 raise on a 68K base salary, which is disgusting. I found that tremendously offensive. And my rating and the job was like 4 out of 4, which I found surprising, but I guess like I was doing really well, which is shocking to me, but it just didn't add up, right? Like, okay, so if I'm doing well, how much better can I get? What's higher than a 4 out of 4? Nothing really. And that translated to a $700 raise. And I realized that I can work my ass off at work. And I realized this before, but like this was just really hit home with that. I can work my ass off at work. And what really resonated with me was looking at people around me who grinded until like maybe 8 p.m., 9 p.m., waking up at 9 a.m., going to their full-time job. Maybe they got a $700 raise too. And I was like, this is ridiculous. I'm just going to quit this job and be in control of my own finances, my own faith, and kind of just cut the ties off and do my own thing from there.
Awesome. And so how are you spending your time these days as a real estate investor? Like, do you allocate a certain amount of your capacity or time per day to wholesaling and then switch gears or hats into other opportunities, or how do you approach that?
Yeah, definitely. I am facing the growing too fast kind of dilemma where you grow all of the business a bit too quick. So now it's taking a step back and slowing down and kind of putting the systems in place in each one. So right now, wholesaling is number one priority. I will drop anything and start focusing on that because as I'm sure you know, when it comes to dealing with like motivated sellers, picking up the phone as soon as they call is extremely important. If you wait a day to call them back, that day could mean a lot to them, especially if they go into a foreclosure or a tough time. So a lot of my day is focused on wholesaling just because it's the most sporadic. Things pop up all of the time. And very much right now in our business, we're working in the business, whereas we want to take a step back and start working on the business. So we want to get the people in place and hire the right employees to take on certain tasks from us. So right now, like one of the most time consuming tasks in wholesaling is just picking up lead calls, right? If you send out 20,000 flyers, get a ton of calls, and let's say 70, 80% of them, like there's no opportunity there, but you still have to answer those calls and vet them out. And that's a huge time killer. Also on the dispo side as well. So right now I'm handling dispos, and I find that sometimes I will, and like I'm happy, like I'd be happy to chat, but the tough parts I don't have all the time in the world, but people will call me sometimes like, hey Austin, I got your number from this ad. Like, can you give me some advice? I was like, oh, is it in regards to the property? It's like, no, I just want to get your advice. I'm like, there's a dilemma there, right? Because I don't have the time to kind of just take sporadic coaching calls, but at the same time, I don't always have the heart to say no. So we're getting the people in place to, kind of be the mediator before, so we can only touch serious buyers and serious callers. So getting those systems in place and hiring. In terms of the portfolio acquisition side, that's a little bit more hands-off. The good thing is that I'm used to investing long distance, and now it's no different. We're still investing long distance, this time more in Northern Ontario. I know I saw your video that's you're a pretty big fan of Sudbury in terms of like when you talk about northern cities, that's probably the one that you're most bullish on. That's where I'm investing as well. Right now is in Sudbury, so acquiring a couple of multis there, but slowing down a bit on the acquisition side just because I still want to buy properties. I understand that's the way to build long-term wealth, but like as you know, like, and you mentioned a couple of times, the market seems a bit frothy, right? So I don't want to expand as aggressively as I was before. I'm focused more on capital generating businesses and then redeploying some of that into buying assets, holding some of that liquid to deploy into more assets if or when the right opportunity does show up. So that managing long distance, still the same. We have amazing contractors, like a team of 8, like a contractor with 8 people. They finished a gut project in pretty much 3 weeks for us, right? So they're very quick in and out. They're a bit more expensive, but I would pay more money to have people in and out, and with confident I can pay back the private money lenders ASAP. So that system's pretty well set up. And then lastly, Rise Network, which is our real estate community. So that's more of a passion project for me. It's kind of just growing organically. With that right now, Mayu and I are handling everything almost. So we started getting more people involved, right? Some of the kind of volunteers to help us run the event, and exchange to help them grow their brand as well. And we just recently hired a VA. So that was a very long answer, but to summarize everything, there's a lot going on. I'm very much working in the business, but now it's a matter of hiring the right people and putting the right people in place. That will take a bit of time. Like as I'm sure you know, your team has slowly grown throughout the years. And I'm hoping to kind of do the same thing in the sense that I don't want to be working my entire life, you know, like I want to be able to, like, if anything happens, I want to be able to step away from the business. And right now there's no chance in hell I could ever do that without having, I don't know, either brand damage or revenue slowing down. So that's kind of what I've been working on.
Awesome. Yeah, really appreciate it, Austin. And so talking about investing from afar, what are the similarities and differences between investing in Windsor as a GTA, like someone living in the GTA, and investing in Sudbury?
There is almost no differences, I find. Like once you learn how to long distance invest in one city, you can apply it to any other city. Like if you follow kind of the same process. For me, like everyone kind of has a different process. This is the process I personally use and I've recommended to people who have asked me. And I'm sure it's probably in line to somewhat of what you're thinking, or maybe identical as well. The first thing I always do when I want to invest in a new city is I'll go on meetup.com or Facebook and see if there's like kind of a group oriented towards that specific city of investors. So in Windsor, this is a Win City group. In Sudbury, there is a Sudbury real estate group. However, it's not very active. I was still able to connect with some of the investors there who referred me to other investors. And then I'll go on Facebook groups like things like Cashflow Tribe, Rise Network, the Right Club. They're like the good thing about the community is it's not a city focused investor community. It's an investor focused community where people invest all over the place, right? So I'll connect with investors there and then ask for referrals on real estate agents, right? If they cannot give me a referral to real estate agents because for whatever reason there's no investors in a particular area, like Timmins, it's hard for me to find an investor there. What I would do is I go on realtor.ca and I would filter for commercial properties. And I'd click on realtors who list multifamily properties because those realtors definitely have either pocket listings or they do volume. Like they understand investments, because otherwise, how are they listing 3 or 4 multifamily properties? People, like a couple of people definitely trust them. And then I'll call those realtors, right? Start vetting them out. I'm sure you have videos on how to vet realtors as well. I use like the kind of Bigger Pockets book, the book on investing in rental properties. They have like interview questions. So I kind of use some of that question and just follow my gut instinct on which realtor I want to work with. From those realtors and those investors that I spoke to, I asked them all for property management references, right? So let's say you speak to 10 people and you get 5 property managers. Now you interview the 5 property managers. With all of those people you spoke to previously, you asked them for contractor references. So you spoke to 10 realtors / investors, 5 property managers. Maybe they gave you like 4 contractor references. Now you can interview those 4 contractors, get them to quote things out. Like one thing that I look for contractors is I want to make sure that they work with long distance investors and they're competent in using technology. Have they used like Facebook Messenger before? Have they used WhatsApp before? Because that's how I prefer to get my photos and videos, right? And if they haven't, like generally I will try to interview other contractors and kind of X them out. But if they're your only option, you're going to have to try to figure out a way to make it work. So yeah, property managers, contractors, and then in terms of figuring out ARV and property prices, really, I usually, like as you know, like realtors is who you rely on ARV, and I check it against investors, and the reason being is because realtors, not to shit on realtors, but a lot of them, and I get it, they're gonna boost up the ARV from what it is to make a sale, right? Like it's not 100% conservative. So you take what they have, you confirm it against an investor, and that's how you start building the understanding of what prices are going for. Property managers, you ask them what's good in bad areas, right? I will set up a Zoom call like this, like literally a 20-minute Zoom call. Go on Google Maps and say, hey, this is the map of Sudbury. Can you point out what's good, what's bad, what's A, B, C, D, right? I'll even give you money for your time. And a lot of the time, they're more than happy to that if they trust that you're going to be a repeated buying client, right?
Yep.
So yeah, I mean, it's really that's kind of what I do in any city. Nothing has fundamentally changed, right? It's all the same systems. It's just the tough part is building your new power team. But like there's always processes to build your new power team, right? Long distance investing is nothing new.
Yeah. And talking about the economics of those two markets, what do you like about Sudbury?
Yeah, I guess I guess the main focus for me as an investor has always been cash flow and also making
Even though you
sure.
don't trust it.
Okay, I trust it, but I don't trust living off of it just yet because until I have like 10K slush fund in every single property, then I was like, okay, that would make sense. Yeah, totally two different markets, right? Windsor for me, it's a stronger economic fundamental like market, like gonna have stronger growth, right? Stronger population growth, stronger employment growth, better university. More attractive to immigrants. The issue is right now is that Windsor's house price is, to me personally, quite high. What I find is that a white collar Toronto employee probably will struggle to afford to qualify for a house in Windsor alone, right? Like on a single income. Like I was making 60 to 70K in my job. I think I would struggle to qualify for a Windsor property today, like a multifamily, like a duplex, right? Because they're selling for over $500,000. And I find that personally quite concerning. We're talking about someone who's working at RBC, corporate, making like a pretty decent income starting off, like struggling to qualify there. So I was like, shit, well, I'm going to take a step back there and try to find some cheaper markets. For me, really, all that matters is if a city has a large enough population. I know the greater Sudbury district has about 140, 150K population, maybe a bit higher than that. Sudbury itself, like the Sudbury proper, I think it's close to 100,000, like maybe 90,000 or so.
Yeah.
So I like to see a large population. I like to see a population increase. I know that Sudbury has had like a dip, I think it was in the 90s, but then slowly since then, it's been a bit flat, but projected to increase as well over the next couple of years. It's not like a perfect market by any means. Like it's still very reliant on the mining industry. I think Laurentian University has declared financial difficulties, which is concerning, right? There's definitely there are obviously some red flags here and there, but in terms of Northern Ontario, that's where I find the most affordable price points, cash flow, vacancy rates are really low, rents are really good relative to purchase prices, and it's still a strong, in terms of population, it's still like it's still considered like a large city in Ontario. So I kind of just went with my gut feeling on those type of metrics and went there. I'm not investing for long-term appreciation there. Like I don't know if Sudbury is going to appreciate by like even 3 or 4% over the long term. It definitely has increased more than that over the past couple of years, but every city in Ontario has, right? Like almost every place in Canada has. So like, I'm not going to use that to reflect the future, but I just like the cash flow there, and I can burr properties. That's what matters more. If I can pull my money out in 3 to 6 months, then shit, it's not a huge concern of where I invest as long as vacancy rates are low, rents are high, and I can cut rents and still cash flow. If vacancy rates increase and I need to cut rents, then I'm okay. I'm hedged pretty well in my opinion.
Yeah, when you're getting started, especially when you're in the growth phase of building up your portfolio, that velocity of money and being able to turn it over quick is absolutely important. So just remind me, what year was the first year you bought your first rental
property? Yeah, my first year I bought my rental property was September 2018, and I closed on it, I want to say like probably December of 2018.
Okay, so 2-3 years since then, the market's been on a pretty hot run during that time. Do you think, is your advice any different for someone starting today in 2021 versus someone that would have been starting back when you started?
Yes and no. So when I started, I definitely over leveraged myself, right? And I was borrowing money from people. I spent all of my money. I don't know if I would give the same recommendation today, right? Because market outlook, as we talked about, is like frothy, right? Like we don't know the direction of where real estate's going to go over the short term or medium term, I guess, like medium term. Short term, it looks like it's probably going to still be a bit steady, but like medium term, we're not sure which direction it's going to go. And that could obviously impact appraisals. And it has, what I've realized now is appraisals are getting impacted where people are like the banks are telling the appraisal companies to be more conservative. For example, I got an appraisal for $350K on a property and Scotiabank was like, nope, go back to the appraisal company and say, give them $300K. It's like, what the hell? Like you guys, right? So like stuff like that is scary, right? So I would recommend obviously having some liquid funds, not over leveraging yourself to do that, or working with other people, other people's money, right? Like that's a great way to get started as well. But overall, the principles that I believe in still remain the same. If you invest in cash flow, if you buy under market value, if you buy a property that you can burr, right? Preferably being in and out of a property sooner is better nowadays than doing a project that's turnover is going to be 8 or 9 months, in my opinion, my humble opinion. Like I don't want to wait 8 or 9 months because I don't know what's going to happen 8 or 9 months. I like to be in and out in 3-4 months because at least the comps that I'm seeing now are still going to be relevant 3 to 4 months later in an appraisal point of view, right? Even if prices change recently. So that's my only advice is that don't over leverage, or if you want to still break in, of course, try to use other people's money whenever possible. So you don't have to put all your money on the table, but still get into real estate investing, still invest in cash flowing assets, still buy undervalued assets and, burr it, but just think of shorter timeline projects, in my opinion. That's what I've been trying to do.
Awesome. Yeah, appreciate that. And do you mind just giving us a quick synopsis of like a recent deal in Sudbury that you did or you were excited by?
Yeah, so this was actually one in Sturgeon Falls, which is about, I want to say 45 minutes from Sudbury. So I invest in Sudbury, but sometimes we'll go around the surrounding areas. So that property was an off-market deal we picked up at 155K. It's a duplex down there, and it's in one of the stronger areas of Sturgeon Falls. Single family houses are all trading at 260K plus regularly around that like little neighborhood. So 155K was obviously a great deal. But it was definitely like a bigger project where one of the units required a full gut insulation. Well, not a huge project, but like gut it down, insulation, obviously drywall, and then all cosmetics, right? So things that will kind of take some time. Some framing as well, building a new bedroom. And then the other unit was tenanted, so we have yet to turn around that tenant yet, but they're paying 85% of market rents, right? So my plan is to move them to, once the gutted unit's done, move them there, fix their unit, put them back in their unit for maybe a $50 rent increase if they're okay with it. So that brings us to like 90% of market value, which is good enough for me, and then rent that unit over, the unit that we fixed up. But so picked up 155K. Renovations are going to cost probably around $65,000. ARV is going to be about 310K, at least 300K conservatively based on what we're seeing single families trade for. And then we raised that capital 100% private. And then we raised all of the construction financing as well. So the 70K never came out of pocket as well. So 100% LTV plus renovations. Interest rate is quite heavy, to be honest, but fortunately, all of it is a balloon payment, right? So there's no payments. Like we had nothing come out of pocket. So like I don't feel any stretch in terms of liquidity at all, right? We're paying back in 4 months from now, but our project's going to be done in about a month. When all is said and done, we're going to be able to fully refi, pay the lender the entire amount back, have no money in the deal, maybe get a little bit of money out. Worst comes to worst, if it appraises lower, then maybe we'll have to pay the lender 10K. But 10K for a newly renovated duplex, I'm fine with that any time of the day, right? Searching for the perfect burr. Sure, people get it screwed up. Everyone tries to get a perfect burr. It's rare, right? Like it's not, don't try to chase that unicorn deal all the time. But yeah, and cash flow after refinancing, after property management, after allocating 12% to vacancy maintenance and repairs, cash flow is about $600 after refi, which is like a decent quick project. It's something we got done in about 2 months.
Awesome. Yeah, really appreciate you breaking that down in such detail, Austin. So if people want to follow along with you on your journey, where's the best way to do so?
Yeah, best way to do so is follow me on Instagram at Austin Yeh 6. Yeh is YEH, and from there my link tree has all of my other social media links.
Sweet. Well, again, really appreciate you jumping on the call, Austin. It's been amazing to watch your growth over the last 3 years. I'm really excited to see where you're headed in the future.
Appreciate it, Matt. And Matt, again, thank you so much for all of the great content you put out there, right? Because if it wasn't for people like you, Mike, Matt, Pichet, like I would have never got started in investing, like just straight up, right? Like it was the networking events that you guys hosted at the beginning and continue to grow, the communities that you built, like the courses that you put out, the masterminds that you held, right? That got me to where I am today. So yeah, no, like appreciate it, Matt.
What is up, YouTube? Sorry to interrupt, but before you guys wrap up this video, I've got a quick announcement. We put together a survey where I'd love to get your input on your perspective on what other content should we shoot on this YouTube channel. I've literally made thousands of videos, talked for thousands of hours now about YouTube, and I'm just not always sure what to talk about next. Sometimes it feels like I'm just beating a dead horse, but I'd love to hear from you guys. What subjects should we go reapproach? What videos should we remake? What subjects have we just completely ignored that, like, duh, we need to go make a video about that? Let us know, not in the comment section, but through this survey, and there'll be a link in the video description down below. Thanks, guys. I'll see you in the next video.